Hi, this is Drew with Daniels Ag Services with your morning report. Grain markets finished up mixed yesterday. You had corn and wheat trading lower while beans finished up higher. Same remains true this morning. Corn and wheat are lower while beans continue to trade higher. Got export sales released this morning. They were seen as beating the expectations as far as what the trade was expecting for corn and wheat, and then the bean sales were within trade expectations. We also got some sales announced across the 8 o'clock wire this morning. Optional origin beans from the U.S. going to China for 2013-14 of around 112,000 metric tons, I believe. Optional origin just means that the beans can come from the U.S. or one or more other exporting countries, so they might not all come from the U.S. We don't know. That's why they're optional origin. We also got corn sales announced this morning to Mexico. I believe it was 284,000 and some change for 2013-14 delivery. So demand remains strong for corn, not surprising given the price levels we're currently at. More competitive on the world market than, say, we were a year ago. And then China continuing to buy wheat, whether it's optional origin or not. It's coming from the U.S. initially. That's U.S. with optional origin, and no cancellations like the trade's expecting. It's pushed beans up over $14 this morning. We'll have to see if it can hold that level and close through it. That's one thing that a lot of technical traders are looking at, is the bust through the 14 level. Could send it significantly higher, so we'll have to see how that plays out. Another thing with the soybeans is I keep getting pictures from Mato Grosso, which is a major soybean producing area down in South America, where there's just having significant problems due to the wet weather they've had. Seeing sprayers, seeing combines, and everything stuck in mud because they've had so much rain. So we'll have to see how that pans out. A lot of people thinking that we're going to end up with a lot smaller crop than was expecting. So it's not surprising to see the weather premium from South America boosting the bean market like we've seen here lately. As far as wheat goes, we've got a little bit of a bubble burst as far as wheat goes this week. The forecasted temperatures throughout the plains and the central U.S. haven't been as cold as they thought. So some winter kill concerns that we had for this week have kind of subsided. Also some snow in the forecast. So that's really taken some of the premium we had built up in wheat out. And one market we normally don't talk about, which is oats. Oats, I'm not sure if you saw, there was a Wall Street Journal article about oats released yesterday, talking about the transportation problems up in Canada due to the extreme cold weather. Trains running on air brakes, only able to move half the load they normally can, and they're preferring to haul crude oil over oats, it seems, therefore creating logistical snafus, and they can't get the oats where they're needed. Apparently farmers are sitting on a lot of oats. They just can't get them out to the market. Well, Wall Street Journal comes out with that yesterday, and of course it's buy the fact and sell the buy the rumor and sell the fact. Well, once the news started hitting the headlines yesterday, oats went from limit up in March, and they closed down on the day yesterday. So huge trading range. That parlays over in wheat a little bit, though, is because if they get the logistical issues fixed, couldn't start moving some wheat as well, and that probably also had a good deal to do with the wheat market selling off like it has the past couple of days. So that's all we've got for today. If you have any questions, let us know. Otherwise, have a great day.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risk involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.